Hi there, traders. This is Brad Gilbert with today's trading action. All right, now all eyes on the US non-farm payrolls. Key data that the market is waiting for, right? Especially the Fed. Now, we've had a pretty weird week. We had that big, massive down day on the equities, bit of discombobulation across the markets, but everything has calmed down just in time for the non-farm payrolls. Now, a little bit of a pullback here in the dollar, right? It's like the whole market's been short dollars because we know what the Fed are doing. So we had that squeeze. Now that squeeze in the market, right? You saw euro go down, sterling go down, Aussie, Kiwi, and then dollar CAD up, dollar yen. Well, it sort of popped up, and then dollar Swiss up. So we had that situation. Now it's a clean out of the market. Now we're starting to see the market come through with following the US fundamentals, which is weakness. Okay. Now there's a little bit of an edge to this, right? When we are looking at the non-farm payrolls, and you can sort of see here, the euro, sterling, Aussie, Kiwi heading up, all the dollar pairs going down, everything looks pretty rosy, right? So that's where we are. Now, non-farm payrolls, this is the key part to it, right? The data, okay, the poll 160K for the non-farms, 100 to 246, and really the unemployment rate is the next key part with 4.1 to 4.4, I should say, is the range for the unemployment data. Now, these are important, right? Because when I come back and you look at what is the market expecting, well, I tell you what, we're at 41% chance of a 50 basis point cut. Now, that will be quite alarming, right? If they have to go to 50 basis points, it's more like a panic stations. So what do we need for this? Really, to me, the best trading opportunity will be 0.25. And that means we don't want data outside the general range of the lows here, right? If we get a number outside the low, lower, and then higher above the 4.4 unemployment, we're going to see a move towards where the market's going to factor in a 50 basis point cut. Now, I think with that, the dollar is going to go down, right? So, but I'll show you the pairs. To me, dollar Swiss and dollar yen are the two best instruments, right? Because if we get a big number outside the range, like showing the US market's melting down a bit, then it's going to be sort of a bit of panic stations. The dollar will go down, but there'll be a rush to safe havens as well, Swiss and yen. So dollar Swiss down, dollar yen down, definitely the way to go. Now, as I was just saying, now if we get a number sort of, on the low side. So here about, 120, 130, and the unemployment rates, say 4.3, 4.4, right? Well, then we are going to see a nicer move, which will be just the dollar going down against everything without panic, right? It'll just keep moving down. And then we have opportunities here for euro going up, definitely dollar Swiss and dollar yen, either way, whether we get small numbers or large numbers. If it's large numbers, I'm favoring dollar Swiss and dollar yen as the best two pairs, right? Because they are the safe havens as well as the dollar going down. If we get those numbers not massively weak, right, but weaker than the forecast, then we should see euro, sterling, Aussie, Kiwi moving topside. Like Aussie's got a resistance line. Sterling doesn't, makes it a bit harder. Same with with the Kiwi, sorry. And also dollar CAD, well, it's set up for a move down, but look at where oil is. It's back below $70. So that's going to counter any move to the downside. All right. So non-farm payrolls, it's dicey, right? When you want to come into the markets, and the markets will basically go into a free situation where they won't really be moving too much. Now, US equity futures Treasury is lower. The interest rates are a little bit lower. That's, the equity markets has been ruffled all week after that massive down day. So they are slightly up. The NASDAQ sort of futures, well, S&P, well, actually they're down a bit, right? And we're seeing a bit of a mixed reaction across the currencies. Not a great indication with the Asian session, but if you're looking at sterling, Aussie, Kiwi, right, they're all sort of going down. Bit of CAD, okay, tells me there's a bit of a risk-off sentiment in the market, right? So that maybe that's following just the NASDAQ at the moment, NASDAQ equity futures. All right, so this is where we are. It's like you need to know what you're doing. You need to know how you're going to execute, because when we look at the market, this is what everyone's talking about. Market's on tenterhooks ahead of the key US jobs data. Dollar wallows at 1 week low as payroll test looms. So this is it for right now. Okay, so as I said, with the numbers, if I could just try and find the right button there, weaker numbers below 100 and outside the 4.4, right? Lower than the forecasts and lower than the ranges. Well, then dollar Swiss, dollar yen, and with those pairs, right? Sort of plan where you want to get in. Now, if we get really weak numbers, okay, and I'm just looking at dollar Swiss here, right? It's at 84.29, right? So, or say 80, or around there, I was going to say 84.30. What you want to do is, if you're looking to get in, aim to get in like at least like 50, give it 15 or 20 points to get into the market. So you can chase the entry a little bit, right? With the, ideally, you want your stop loss above here, but that's a long way away. So I'd reduce your trade size. If it's at 27, I'm trying to get into the market. You know, if we get, I'm talking about really weak numbers, getting in no worse than 84 the figure, right? On dollar Swiss, right? So that means, you know, you've got 20, 25 points. So, and don't go past that, right? Because if you do, you're going to start chasing the market. If it nosedives quickly, you'll probably get one retracement and then it will go, right? So you're going to have a few chances to get into it. Now, if the numbers come out strong, actually, I should cover this, right? If the numbers, the payroll numbers come out a little bit stronger, well, you know what? It's not a bad thing. It will confirm the 0.25, the 50 basis points will be off the table. So, but we will see a correction in the dollar, right? The market is factoring in weaker numbers, has factored in weak numbers sort of all week, you know, especially with everything sort of moving around the place. If we get slightly stronger than 160, you'll see the euro sort of pull back a bit. Sterling, Aussie might take a tumble down through that support line, as will Kiwi. But you will see, if we get those stronger numbers, probably the dollar index a little bit higher, probably a retest of those resistance lines in dollar Swiss and dollar yen, right? But overall, the Fed are still cutting rates, right? This is one number. The CPI numbers next week will be instrumental in determining the pace of the interest rate cuts. Today is all about, is it 50 basis points or 25, right? And so to me, dollar Swiss and dollar yen are your pairs, and look to get in, okay, either just below the market, but give yourself like 20 ticks to avoid any volatility. And if you're trading live, just look at the reaction. And if it goes sort of 40 or 50 points, get ready to put an order in back at that 20-point mark so you can get in at a decent level and you can quantify your risk, right? That's what all this is about. Now, if you don't have access to Metastock, don't forget, if you're on our website, okay, economic calendar, you will be able to get access to the data. Just refresh the page right on the time of the release, and you will get the key numbers here, right? Unemployment rate, 4.2. The non-farm payrolls, 160. There's your ranges. Knock yourself out, all right? It's pretty loose. It's aggressive. So let's just see how it plays out, all right? Rock and roll numbers, big Friday, lots of media attention. Just control your risk, hit the market if the numbers are right, and make sure you do have a plan, right? You need to have a plan. Like if, for instance, let me just sort of scroll down here. I should have mentioned this because this is exactly what everyone who's trading professionally would be doing. They'll have a number here, right? Under 100, okay, we're selling dollar Swiss and dollar yen, okay? That's even if the unemployment rate is 4.2. If it's under 100 and above 4.4, well, the dollar's going to get hammered. And I'd say once again, the safe havens, dollar Swiss, dollar yen are the best pairs. Outside of that, if we look for opportunities where, as I was saying, like sort of moderately weaker, it's an easier trade. The markets will behave more, maybe like 4.3 and 120. That would be a designer outcome. The dollar's just going to go down against everything. It'd be nice and orderly. There'd be no crazy volatility. You'd be able to get into the markets, and that's our ideal solution, right? Sorry, I should say our ideal outcome. that is an easy trade, easy to execute. That's why. All right, guys, it's going to be all hands on deck. We'll see how it plays out. Good luck and happy trading.